right, welcome to the daily market recap for Thursday, July 31st. The month of July is officially in the books. Hopefully, everyone had a great trading month. In this video, I'll be taking a look at the action of the indexes, liquid leaders, industry ETFs, key earnings reports, then end the video with some long and short setups going into tomorrow. But before we get started, I've got exciting news to share. Tomorrow, I'll be joining Ariel Hernandez, aka Real Simple Ariel's trading Discord, as a key contributor. Ariel is one of the best traders that I know, turning $30,000 into $3 million in his first year of trading. He's been compounding that ever since. In the Discord, Ariel live streams pre-market prep along with the majority of his trading day, then posts a post-market video similar to the ones that I post. I'll be joining Ariel for many of these pre-market prep sessions, along with my own weekly live streams during market hours once a week. Then I'll also be sharing the trades that I take, the setups that I'm watching, overall market thoughts, and answering any questions that you may have. The goal of the Discord is to educate and keep traders on the right side of the market. And as you can see from the first trade that I posted in the Discord, I'm going to be fully transparent. Of course, I would have loved to start off with some fireworks, but I took a 0.8% loss in CrowdStrike. That was the first trade that I took, so I posted it here. While it's fun to post your wins, it's more important to show how you handle a loss. So if you want to hear my market thoughts throughout the day and learn from Ariel, myself, and other great traders in the Discord, try it out for a week for just $30 or sign up monthly for $99. Use the link in the pinned comment to get started. Talking about getting started, let's get started with this daily market recap with the indexes first. QQQ, massive gap up to start the day with Microsoft's earnings, Meta's earnings, Roblox, even Hood was slightly down. But QQQ started the day with a massive gap up. Immediately, we saw selling pressure come in. We bounced into the view app and then sold off the rest of the day, closing the day actually down 0.48% under the 5-day moving average and into that 10-day moving average on volume. Now, this action is obviously not ideal. We were a little bit stretched, and in that gap up, it basically gave people the chance and the liquidity to sell some of their shares into and kind of de-risk. S&P 500, similar action, gapped up, barely made new highs, and then sold off through the day, lost the 5 and the 10-day moving average, closed right at yesterday's low. IWO, we talked about this yesterday. This is the growth stocks of the Russell 2000, and we had this nice support gap through here, and we said the way that this is going to break either to the upside, taking out the resistance gap, or to the downside, taking out the support gap, is probably going to signal the next move in the market. And we closed below the support gap. We closed right on the 20-day moving average. And there's starting to be a couple warning signs piling up on this chart. And typically, I use this as kind of a guide to the direction that I wanted to trade the most in line with. Above the 20-day EMA, and I tend to trade to the long side. Growth names tend to trend higher. We can have explosive moves to the upside. Below the 20-day EMA, and the reverse is true, we tend to see momentum contract, a lot more downside moves. So the close right on the 20-day moving average, it's concerning. If we follow through the downside, to me, that kind of signals that we might be in a short-term pullback and not to play the long side as aggressively. ARKK gapped up, traded into the resistance gap again, reversed, closed back through the 5 and the 10-day moving averages on volume. And then IBIT, this is tracking Bitcoin. This is a misprint or a weird wick there. But overall, just trading sideways. 20-day EMA has bounced twice there, just consolidating after that rally up. What we don't want to see is follow through the downside, taking out the low of the pullback. We want to see some tight action and then resolve to the upside. Taking a look at the liquid leaders, GEV we'll start off with. Nice gap up, rallied in the beginning of the day, but eventually closed basically flat to the open, up another 0.8, 0.9%. NVDA, big gap up overnight, sold off throughout the day, bounced at the support gap, did close over the 5-day moving average, only down 0.7%. But as you can see, this has basically gone straight up, and now we have a little gap up distribution candle. Doesn't mean that this is the top, but we'll see if we could take out that high and keep the trend going. Otherwise, watching for a pullback into the 20-day moving average, this gap zone around 171 is a key area for me. Palantir, not doing anything wrong, just chopping sideways, has earnings in a couple of days. Roblox was one of the key earnings announcements, was up about 20%. Let's actually measure that. Um, yeah, opened the day up 19.7%, just a massive move. Green line breakout attempt through the highs. We did close slightly red, so not quite a green line breakout. You want to close above the previous high for that to happen. Um, but still, end of the day, up another 10.6%. This has been a monster stock, basically a 200% move without even testing the 20-day EMA. So the fact that we gapped up and sold off a little, not too concerning to me, but obviously a little bit extended here. Coinbase basically traded sideways for the day, announced earnings after the market closed. Last time I checked, they were down about 3%. Let's see if that's the case. Probably down a little bit more from 370 to 345. So if we go to a daily chart, if things get really extended tomorrow to the downside, I'll be watching this 340 gap zone for an undercut and rally, just for like a day trade bounce spot. But obviously not great action that's gapping down on earnings. FUTU had a nice undercut and reclaim of the 20-day moving average and support gap, closed well in the daily range. This is one of the leaders in China that I still think China has the ability to go into a nice stage two uptrend. I don't know if it's quite there yet, but this is the leader in that theme, so we'll be keeping track of that. Robinhood had earnings yesterday. Really thought it was going to take out this pivot and then rally into new highs, but we got good feedback from the market. We took out that pivot and then reversed and closed kind of near the low of the day under the 10-day moving average. And that's showing me that liquidity areas like clean pivots like this are being sold off into. And that's just a sign that the market is taking some risk off the table and to play a little bit less aggressively until we see follow through to the upside. Rocket Lab, good reaction off the 20-day moving average yesterday. Higher highs, higher lows today, but did close slightly down 1%. And then SMR, I thought this could get through yesterday's high and then have a nice ignite bar. That was not the case because the market was so weak. We got through yesterday's high, but then closed lower, basically at the 5-day moving average, down 0.6% today. Before I jump into the industry ETFs, we have updated numbers for NAAIM. This is the Active Investors Exposure Index. Gets updated on Thursday after Wednesday's reading every day. And surprisingly, exposure dropped again. So we had a 99 reading back at the beginning of July. Typically, when you get over 95%, you see some distribution, market pullback. Those clean pivots tend to get sold into. Doesn't have to happen that way, but basically, if everyone's already long, they're going to be using those liquidity areas, either new highs or just clean daily pivots, as a spot to de-risk. And below 99, it's basically like a non-signal for me. This is just saying that there's still plenty of money on the sidelines if the market wants to do a quick shakeout and rally. We'll see what happens tomorrow. Overall, the action, like price action always comes first. Price action of leaders, very, very important. NAAIM exposure index is important in my process, but it does not trump the price action. Price action is key. So never want to argue with that. The fact that this is getting down to 76 is just showing liquidity has been leaving the market. We've basically seen that with the number of stocks rallying kind of narrowing. We've seen a lot of speculative names make very good moves, but for the most part, it wasn't just the entire market that was moving up. So we'll see how this goes. If this can stay low while the index is just chopped sideways for a couple days, I think we can have another leg up into kind of like a blow off top like we saw in September of 2020. But like I said, secondary indicator. One thing that let me actually bring this back to QQQ. The bar that we had today with the gap up and then weak close kind of reminds me of two different types of action in the market. The first is in 2020, where we got a little bit ahead of ourselves on July 13th. We had a nice big move off the low, kind of a little bit of chop, and then we rallied up and had a big gap up that got sold off into. And July 13th, the exposure levels, NAAIM, was basically around the same. And what we got at that point was just 2 weeks of chopping sideways, a undercut of the 20-day moving average, nice pivot, and then we took off and really rallied up into that blow off top into September 2nd of 2020. And then from there, we actually had to consolidate for multiple months before another leg higher. So that on an index level is kind of the action that I'm expecting. Because exposure isn't 95% or higher, there's still going to be buying support to come in. People that were waiting for a pullback, waiting for a pullback, waiting for a pullback, finally do get one. Chances are they're going to support the price action in some manner. So maybe 2 weeks of chop that we get, a tight pivot, and then we can really just rally into a blow off top. And then on an individual stock level, NVIDIA back in 2021, I believe it was. Let me zoom out here. Sorry, not 2021, 2023, where we had an earnings gap up that got sold off into. Because everyone still wanted NVIDIA, we had a bounce at the 20-day, rallied up a lower high, and then we went sideways for a couple months before breaking out into the big real move where it basically doubled in a couple weeks. So while the action today was pretty ugly, I don't want everyone to just throw in the towel on the market because exposure level is not overbought, because the liquid leaders are still acting incredible overall. I think we're more so going to see like pullback, chop, instead of just like an all out sell off. But we'll take it day by day. But those are the two scenarios that are playing in my head based on what I've seen in the market in the past. Okay, jumping into the industry ETFs. FDN new all-time highs today with Meta's gap up, closed at new all-time highs with a nice gap. KWEB, one of the only other groups that were green today. This is the Chinese Internet ETF, just sitting right on that 20-day EMA. Overall, it's not the cleanest action, but trying to break out of a 2.5 year base, you don't tend to get super clean action. The fact that we're coming down in the 20-day isn't horrible to me. What I don't want to see is this continuing to drop and then like retesting the breakout area and then falling even lower. Basically, you could draw a line at the sand, basically at the 50-day moving average. We should not take that level out if this is going to be a new stage two uptrend. We'll see what happens there. Semiconductor SMH gap down to start the day, sold off through the 5 to the 10-day moving averages, bounced at the 20-day, still closed over the 20-day. So as long as we hold today's low or even the support gap below hand, I think it's still overall fine. TAN, the solar ETF, I was super bullish on this, thought it was going to be kicking into a stage two uptrend. But then we started noticing some things pile up. We got a gap down on July 23rd, another gap down on the 28th, third gap down on the 30th, and then another gap down today, losing the 20-day. So maybe this is still a theme that can work in the second half of 2025, but we're going to have to get over the 20-day EMA for that to happen. I got stopped out of NXT on the earnings report. So overall, I'm kind of souring on this group. And cybersecurity is the other group I wanted to talk about. If the market rally was going to continue like right away without digestion, I thought that this was going to be the other group that we are going to see rotation into, hence that CrowdStrike trade that I put in the Discord. And unfortunately, that wasn't the case. We gapped up after shaking out the 50-day moving average yesterday, opened on the low, opened on the high, closed on the low under the 50-day moving average. Just ugly action overall on volume. So that explains why the CrowdStrike trade didn't work, but I still think that was a good risk reward trade if the market was going to continue its rally right away. And then zooming out, I can sort this based on price versus the 21 EMA. And very quickly, we're starting to see only a few of the groups, 10 out of 25, so 40% of the groups are above their 21 EMA in just a couple days of volatility. That's another warning sign to me that the market's going to get more choppy or we're going to have a slight pullback. At this point, even though the exposure levels have dropped, The price action, like I said, is key, and the price action across the market is telling us that things are going a little risk off. Price versus the 10-day, only two of the groups are over their 10-day moving average. Not ideal action. So jumping into the long setups, I've got 9 to share. Actually, sorry. Before that, let's cover the key earnings. Meta gapped up today, was up 11.2%, closed basically middle part of the daily range after the test of that 50-day moving average. Nice cup and handle. We'll see if we just continue to wilt down here or if we can build out like a little flag and then move higher. This was one of the better kind of performing stocks based on the opening price. Microsoft had a massive gap up at the open. I think this was up like 10, 11% at one point, but opened near the high, closed near the low. End of the day, only up 4%. Big distribution right there, but it did get ahead of itself. It has gone basically straight up from 350 up to 550. Massive move for one of the largest companies in the world. Roblox, we covered that earnings. Hood, we covered that earnings. Um, and then, yeah, we'll get into the long setups. Reddit also reported earnings today after the close. We could see they are rocketing higher, trading at 186 right now. So 186 just below this gap zone. Basically, I would just be trading this as an opening range break. Stop would be the low of the day, kind of looking for a performance booster there. Because the market had the big distribution today, I'm not going to be taking this with large size, if any, more so seeing this setup as kind of a risk on, risk off indicator for the market. If we see distribution like we saw with Microsoft, um, with Roblox and the rest of the market today, that's just another sign that people are using liquidity to sell into and de-risk. If we can get a gap up and rip higher, maybe it's just a 1 day shakeout to kind of clear the deck before a move higher. But Reddit, NET also reported after the market. This is the leader in software and security. Nice 4% gap up after hours. We'll see how that gets treated as well. SEZL, this was on the watch list yesterday as well. Just looking for a pullback into the gap zone, into the 50-day moving average to buy versus the low of this shakeout on, what was that, Tuesday? Going to be a really tight area to manage risk against. The entry would be like 142.50. The stop would be the low here, which is 138.52. Again, in a market like this, I want to be buying shakeouts rather than breakouts because IWO is right at that 20-day moving average. Typically, at that point, shakeouts are better entry tactics than breakouts. But we'll see if this breakout can work. SYM is known for breaking out and having these large ignite candles. Great relative strength today on the breakout attempt, finishing up 2.3%. This is one where, because it's squatted, I'm just going to use a pivot retest as a buy point. 54.45, the high from, that would be Tuesday, as an entry. Stop would be below today's gap up zone, so below the 5-day moving average in yesterday's close. Something that's got to work right away, otherwise I'm out of the trade. Don't have a position in it yet, but really like how it's flagging. Really like the support or the relative strength today. And a lot of the times when the market is super weak on a single day and you squat, but you don't completely fall apart, you can gap up and take out that same pivot and then have an ignite bar. So we'll see if SYM does that tomorrow. Okay, LO, similar thought process behind this. Nice big move, cup handle, whatever you want to call it. Tested the 20-day moving average, rallied up, gapped up yesterday, tried to get going today. The market just was not strong enough. So a retest of that pivot at 78.25 is a potential entry versus the low of today. GEV a little extended, watching this on a pullback to the 10-day moving average, gap zone, and the high volume close from earnings right around 6:30. Stop would be the low from this day, 6:15.45. TME, this was on the watch list yesterday as well. One of the leaders in China. Good first test of the 20-day moving average after earnings, ran from 15 up to 2250 without a test of the 20-day EMA. So the first time a leader comes back and tests the 20-day EMA after making new highs, it's typically a good risk reward spot. We'll see if that's the case here. I would want to see just like chop in the morning, buy versus the low of the pullback today. And then if it can get going, great. If not, that's a 1 or 2% risk trade. CRSP, this is just going to be a pullback buy. Made a very strong move, 33 up to 70, basically a 100% move in a couple weeks. Since then, has pulled back, had an ugly close under the 20-day EMA yesterday, and then today, lower highs, lower lows, trading into the support gap here. I'm just looking for another gap down to start the day, undercut the support gap low, and then any kind of strength through the support gap would be buyable versus the low of the day there. Then Robinhood, I think this is the liquid leader in the market along with NVIDIA. So the first time it tests the 20-day EMA, I have to buy it. It's part of my rules when a liquid leader tests the 20-day EMA for the first time, especially when that aligns with a support gap. It's a trade that I'm going to take. It also lines up with a $100 round number. So watch for a shake and reclaim of that area, just like we had on the 22nd as a potential buy. Stop, I would use 1 or 2% risk on that trade. So long setups, not a ton out there, obviously. On the short side, more of my focus. QUBT. I said yesterday, I thought quantum was in a do or die spot in the market. I tried to take the RGTI trade today on the open, got stopped out of it when we took out that low. It rallied up into the resistance gap. This is perfect to show why we draw the resistance gaps to the upside too, because we uppercut and failed immediately at that. Came all the way down. And if the leader of the group is doing that, we could start to target some of the weaker names in the group to short. QUBT is one of those weaker names, had this big cup, looked like it was putting in a handle. But then after a tight day, we lost the 5, the 10, the 20-day moving average on the 21st, followed through to the downside, got tight, then lost the 50-day. And now we're showing even more weakness. So just looking for a break through today's low as an entry. Stop would be that 5-day moving average. IONQ, another quantum name that it really looked like a quality setup. Then we saw some distribution wedged up, and I really thought through this pivot at 44.50 could be buyable for kind of like a higher low in the setup. Unfortunately, we reversed, lost the 5, the 10, the 20, followed through, losing the 50-day on the 29th, and then just chop sideways the next 2 days. So through today's low is a short, or if we could get like another day or two just wedging up into the 50-day and get an even tighter risk on the trade, that would be a plus. But we'll see if we can follow through the downside on IONQ. JOBY, JOBY, good action. You could have this on your long setup or a short setup. We basically what we got was rally into highs. We attempted to break into new highs again and got rejected there. Typically, when that happens, it's not a great sign while the market's starting to lose momentum. We came through the 5-day moving average, got really tight today. So, this is why with tight price contraction comes expansion, either to the upside or the downside. Whichever way you want to play that, I won't argue with. A breakthrough today's high is buyable with a stop at today's low. Breakthrough today's low is shortable with a stop through today's high. I just think if momentum is going to be leaving the market, this has gone from $5 up to $18, and we tend to see these really quickly pull back. You take a look at AEVA as an example of one of those stocks that have recently pulled back pretty sharply. INOD, this is gapping down on earnings after what looked like a very quality setup, gapped up, rallied today up 13%, and now it's down, let's see, down trading at 47.89. So everyone who bought today is going to be forced to sell tomorrow, or they're going to be bag holders and provide more selling pressure to the downside as it continues to roll over. We're just going to look for an opening range break to short versus, depending on where it opens up, either the key moving average, the 20-day moving average, or like a 2 to 3% stop there. And then an N, I'm still in the short. Basically got through the 20-day EMA, looking for another lower high, maybe an uppercut and fail of the 5 and the 10-day moving average to add to the short. Um, I would rather it just kind of gap down and then take out today's low. I think that would accelerate the move down, especially with the market pulling back. So that's where I'm more comfortable adding to it. But if you don't have a position yet, an uppercut and fail of the 5 and the 10-day moving averages, then you can manage your risk really tightly there. QMCO, another one of those like fake quantum names. This has been on the short watch list every video because it's just a stock in a major downtrend. Took out yesterday's high, took out the 5-day moving average, but then closed lower in the range. We're just looking for a break through these lows at 785 as a short versus today's high. LAES, more weakness. One of those speculative names that never really got going. Had a couple days where it rallied, but then a lot of bad things started to pile up. Gap down, resistance gap, loss of key moving averages. Now we're just looking for a break under these lows at 309 to take on like a base breakdown. Then finally, MIMI. This is really starting to trade like one of those Chinese scams that have been so profitable to short if you size them correctly and stick with it. OST has been a recent example of this where the entire float gets absorbed on one day. They just wash sale it constantly for a couple 100%. And then in one day, it tanks 93%. TCLA was another recent stock that did that, rallied from 46 cents to $3. This was one that I personally shorted, dropped 76% in one day, and then dropped another 50% or so from there. And then PTHL, this one dropped just 2 days ago, rallied from $2 up to $30, then got pulverized. So a lot of these scams are make their runs and then completely fall apart in one day. MIMI, I think, is going to be one of those because the entire float got absorbed on the 28th. They've just been wedging it up. A couple of these crazy wicks down here shows that there's not actually a bid on this stock. It's purely being manipulated. So when everyone that manipulates the stock actually leaves, you're going to get one of those 70 to 80% drawdowns. But it can go from 9 to 20, just like the other stocks have done. So the key with this is positioning at basically with option size trading, not your full account or anything like that, because obviously it can make still massive moves before it does collapse. But one of those stocks that I'll be watching for a pure collapse. And that's going to be the daily market recap for Thursday, July 31st. If you guys enjoyed the video, please leave a like and make sure you check out the Discord using the link below.